Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Diah Ramadhani with study number 2341-2060 from the Accounting Study Program. Today, I will discuss one of the most fundamental topics in financial management: financial markets and financial institutions. These two components are the backbone of any economy because they connect those who have excess funds, such as households and investors, with those who need funds, such as business and governments. Through this interaction, financial markets and institutions facilitate capital flow, support economic growth, and contribute to financial stability. In this presentation, I will explain what financial market and financial institutions are, their types, how they work, and why they are essential to both individuals and the broader economy. Okay, definition of financial market. A financial market is a marketplace where buyer and seller engage in the trade of financial assets such as stock, bonds, derivatives, and currencies. The main function of financial markets is to allocate funds efficiently from savers to borrowers, allowing capital to move where it is most productive. A financial market provides liquidity, meaning investors can easily buy or sell assets without causing large change in price. There are two main types of financial markets: the money market and the capital market. The money market deals with short-term financial instruments like treasury bills, certificate of deposit, and commercial papers, typically with maturities of less than 1 year. The capital market, on the other hand, deals with long-term securities such as stock and bonds, helping business and government raise funds for long-term investment. Types and function of financial institution. Financial institutions are organizations that act as intermediaries between those who have surplus funds and those who need financing. These include commercial banks, investment banks, insurance companies, pension funds, and credit unions. Their main function is to mobilize savings, provide credit, manage risk, and facilitate payment system. For example, commercial banks accept deposits from individuals and business and lend money to borrowers, while investment banks help companies raise capital through issuing securities. Insurance companies provide financial protection against risk, and pension funds manage retirement savings for employees. By performing these functions, market efficiency and support the most operation of the economy. The relationship between financial market and institution. Financial market and financial institutions are closely interconnected and independent. Financial institutions often act as major participants in financial market. For instance, banks trade securities, investment firms manage portfolios, and insurance companies invest in bonds or equities to earn a return. Meanwhile, financial markets provide a platform for these institutions to operate efficiently and access funding. This interaction ensures that funds flow continuously from savers to borrowers, promoting economic activity and development. When financial markets function effectively and financial institutions are stable, the economic grows. However, when one experiences instability, such as during a financial crisis, the entire financial system can be disrupted, leading to a reduced investment and slower economic growth. The role of regulation and central banks. To maintain the integrity and stability of financial system, financial markets and institutions are regulated by authorities such as central bank and financial supervisory agencies. In Indonesia, for example, the Otoritas Jasa Keuangan or OJK regulates financial institutions, while Bank Indonesia or BI manage monetary policy and supervise a payment system. Central banks play a critical role by setting interest rates, controlling inflation, and acting as lenders of last resort during financial distress. Regulation ensures that financial markets remain transparent, fair, and efficient, protecting investors and maintaining public confidence. Without effective regulation, financial markets could become unstable, leading to risks such as excessive speculation, liquidity crises, or systemic failures. Importance of financial market and institution to the economy. Financial markets and institutions are essential for promoting economic growth and stability. They facilitate capital formation, allowing business to expand and create jobs. They also help individuals save and invest their money safely while earning returns. In addition, by channeling funds to productive sectors, they increase the efficiency of resource allocation across the economy. Moreover, a financial market serves as indicator of economic health. For example, rising stock price often reflects investor confidence and economic optimism. Therefore, a strong and well-functioning financial markets and institutions are crucial for sustaining long-term national and global economic development. The role of financial markets and institutions in economic development. Financial markets and institutions play a crucial role in promoting overall economic growth and stability by facilitating the efficient allocation of capital. They help direct saving from surplus units such as households and investors to deficit units such as business and governments that needs a fund for productive investment. This process stimulates entrepreneurship, job creation, and innovation. Moreover, a strong and transparent financial institution enhance investor confidence, attract foreign investment, and support sustainable economic development. In emerging economies, developing an efficient financial system can significantly boost industrialization and infrastructure growth. Therefore, the performance of financial markets and institutions serves as a reflection of the nation's economic health and its ability to integrate into the global financial system. Next, conclusion. In conclusion, a financial market and financial institutions play an integral role in the global financial system. Financial markets provide the platform for trading and investing investing in financial assets, while financial institutions act as intermediaries that ensure funds flow efficiently between savers and borrowers. Together, they support liquidity, reduce risk, and promote economic growth. A stable and transparent financial system supported by sound regulation benefit not only corporations and investors but also the entire society. Understanding how these market and institutions function is therefore a fundamental for anyone studying or working in finance, economic, or business. Thank you for your attention. That concludes my explanation. Thank you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.